afternoon. It's Tuesday, 3 p.m., our usual time to share some knowledge, convince you to do something you don't want to do. That's today's job. And let's share with you and community CPA's information in case this is the first time you ever watch me, and I want to lead you to our YouTube website. And you see on the, no, this is, you're seeing me, right? You're seeing me. And okay, I thought you were seeing me earlier, but that's okay. And let me switch to the YouTube website. This is our YouTube channel, folks. And if you go onto YouTube and type in Community CPA, you'll come here. You'll notice that, boy, you guys have like 5,000 some subscribers. We want more. We want you to subscribe to our channel because we don't do entertainment here, but we share our knowledge here. The knowledge we share with you is absolutely relevant for small and medium-sized business owners. If you want to scale with us, we take you with us. That way we walk the same path. I just did a webinar over there. That means from 500,000 to 5 million. That is every entrepreneur's dream. And when you starting this journey, obviously what you do, you set up a business already. And to setting up the business, folks, and we want to convince you, even though you have a new business, but tax planning is needed. So this is all about this conversation today. So let's take a look at what we are going to tackle. And I hope that at the end of the conversation, you suddenly realize that, okay, Ying, I agree with you, and I am going to come to see you to see how I do my tax planning, although I am a brand new company. My name is Ying Sa, and the Community CPA company I founded back in 1998. So we are now a company with 40 professionals. We speak 10 plus languages in our firm. We have more than 10,000 clients. And imagine how we working here, right? It's like United Nations, in action. And I served on federal committee called National Taxpayer Advocacy Panel, a federal advisory committee to IRS for 3 years. And that is my first book, folks. If you see it, in front of you, appointment with Ying at 8 a.m. Why is 8 a.m.? Why it is not 4 a.m.? You didn't wake up yet. 8 a.m. you just woke up. You're starting up a new business. So that is my first book I published in 2019. And I am working on my second book. And it is going to be published in a couple of weeks. I finished writing it in the spring of this year. And it's going through the publisher's review and now finally become a print. And this is appointment with Ying at 10 a.m. Growing your business. Who doesn't want to grow, right? You start it up, you grow, you expand, then you retire with glory. Let's just say I have 2 more books to write. One is 2 p.m. expanding, and the other one is 6 p.m. retiring from your business. All right. And before we start, just very quickly, no responsibility disclaimer. Every time I say this, it's almost like we're running away from our responsibility, right? Not so, not so. What we want to do is to tell you that the decision you made in business is yours. Even though you hear podcast, you watch Ying's video, and you did a lot of research, and you come up with a decision, that is a decision you make. It's not because of your podcast. It's not because of the YouTube channel. And if you really want to rely on a third-party opinion, you want to make sure that you engage that professional service, and you want to pay for service because that is part of it's part of the business flow. So you get something that's just for you and designed for you, only for you. All right. So what is tax planning, you ask me? And tax planning is to look at your financials and look at your tax structure, look at the new company you just formed, figure out what would happen when you file taxes. Know the result before it happens. That's all about tax planning. So at our firm at Community CPA, we're very big with tax planning. So our planning season starts from October, so right now, all the way to the end of December. See, I didn't say till next year because a lot of planning need to happen before the year ends. So it is really a process of optimizing a company's financial and structure to maximize tax saving while complying with tax laws. You want to save taxes. IRS don't care about you paying tips to them. The state government don't care about you paying tips to them. They only want you to do it right, do it accurate, so that way and you are not even worried about audit. When audit come, you know you're fine, right? And that planning is essential for financial health and the sustainability of a new business. So with that said, and we want to know that, okay, fine, you tax planning is important, Ying, but I just got my company set up, haven't even done anything yet, and you think it's already need to be planning? That the answer is yes. So what kind of new company did you just set up? That is really critical when we think of you doing tax planning. And for example, and you could run a new company and maybe you are a retail business. So you know that you're going to rent a space and you're going to be buying merchandise, then sell them, so make money. And maybe you are a manufacturing and you already knows how to buy raw materials, producing them to sell. Or maybe you're a new attorney, just coming out of school, has ambition to save the world and wanting to set up a law firm, right? And all of these things, what type of company you run, and it determines many things. Number one, it determines the accounting method that you're going to use. And if I just tell you that if you have a retail business and you are using cash method accounting, I tell you that is wrong. Don't do that. You need to use accrual. So you may be sitting there wondering, why, Ying? Why are you talking like that? There is a big why in there and you've got to know. So I want to make sure that you really understand why you choose what accounting method. The second thing is about the fiscal year end for different industry. If you're running a seasonal business, there is no reason why you should end your tax return by December. And if you are, for example, Christmas novelty shop, and their big sales in December, and they haven't even paid their purchase for the merchandise yet, the year end is already coming, so what do? You pay more money. You pay more money into taxable income, right? Your tax liability gonna be huge because you haven't even paid your bill yet if you are on cash accounting. So there's a reason for your accounting method to be different. You see, that is the tax planning. And once you set up the company and you start running, and before you reach the end of the year and you want to do planning to make sure your accounting method was selected properly, make sure your fiscal year is ended properly. So maybe your year is not December, folks. Maybe your year should be, I'm thinking, for a Christmas kind of business, the year maybe can be sometimes in October, right? So give yourself enough time to spend all the money that you made in December and then come around and paying taxes. So those are things you need to consider. How about structure? You may be starting up a business, went to the local law firm. The lawyer says that let's do LLC because it protects you and it's also low price, cheaper than any other things I do here. So you went out to LLC. But is LLC the right structure for you? Maybe not. So there's so many things that you can consider right in here. If you really want to dive into exactly what LLC, why LLC is complicated, why LLC has so much flexibility, what are these flexibilities, and I would recommend you to go onto my other YouTube channel. Just search for 3D tax planning or year-end tax planning. You'll find those videos and you can actually use those videos to further educate yourself deeper than the reasons. So we want to make sure that when you set up a ownership structure, It is not just about how much you own, how much the other person owns. We want the tax to work as well, and based on each one of your situations. So there's a lot in play. But if you haven't really filed your tax return yet, so you had a very much a flexibility to decide what kind of structure you want to be. You can further elect yourself to be a different structure, or we can go back to the attorney, have something changed so that we can fit into the structure that's good for your business and also good for the growth of your business's future. And even if you lose money, folks, in the first year, people will say that I don't need tax planning. I didn't even make money, plan for what? And do you know that in business, there's no real loss? And your business loss actually can be recouped by you with proper way of treating it. If you are not sure how to do that, go to my videos. I have a video called Business Loss. You just type into business loss and find it. It will teach you, tell you, explain to you why the business loss is actually money in the bank waiting for you to draw. So you need to make sure that you don't look at the losses as a reason not to do tax planning. If you have losses, that's a very reason why you should do planning. All right, so I show you this chart. This is a chart that in some of our videos, you probably already see it. And you can see the boxes I have here. There are 5 boxes, right? So on your right, there's a 1040. That is your personal structure. Then the other 4 are the common structure that you see in the business world for small and medium-sized business. You see LLC, multi-member LLC. That one, you see the dotted line that goes that you can elect that to be S Corp and C Corp. And S Corp, you can reverse back to C Corp. And if you go down under the dotted line, that's a C Corp and nonprofit. The C Corp, you can elect to be S Corp, and then C Corp and the nonprofit are actually separated from your 1040. So if you are a new business owner, you just set up a business, but for whatever reason, on your 1040, you had a reason not wanting business result to impact whatever reason. For example, and if you were injured and you could not, you could not work with your one hand, but you could do other things with the other hand. So you did a small things and a business on the side, but you're also worried about your disability payment and not sure how that works out. And the best way to treat that is to not bringing business ideas or business treatment into your 1040, because that's really where your income is being counted. And just try to dabble it in and try it out on the other entity underneath the dotted line. Contribute or donate your time and effort to a nonprofit so it doesn't affect your 1040, or set up a C Corp working within the C Corp so it doesn't affect your 1040. So there's so many reasons for many things can be planned around. Plan. There's no other word I can find in English to really tell you what exactly that means. Because if you don't plan, it is really just going by your luck, right? But some people are very lucky, and I agree with that. But most of the people like myself, if there is no plan, there's no tomorrow. So every day I wake up, I already planned my whole day. So that is a lifestyle, and you want to put in for yourself. You want to design that lifestyle for yourself and plan taxes as soon as you get into business. Even though you are new, you should still do tax planning. Business losses equal to bank deposit. Isn't that exaggerated? But trying to make a point for you. Every loss is valuable, and do not let it get lost. Manage your cash flow using tax dollars. If you plan taxes, you're going to have a lot of flexibilities on your tax dollars, and you don't have to pay to Uncle Sam, and you can just keep that for yourself. And start business with a growth in mind. That's why your accounting method and your fiscal year, everything should be planned out already. You don't want to imagine your business close tomorrow, so you don't need to do anything. you want to plan for a long run and make it lifestyle. Isn't that true? And I keep on persuading you that it is a lifestyle talk. It is not about you are new, not new. And if today you think you are new, you lose money, so you don't do planning, I hope I convinced you that's not the case. And if you're new, you make money, then don't wait. You need to do planning right away. So you say, I am ready. I am ready. Now what, Ying? What do I do? It is a matter that you simply need to ask, and you will say that, hey, I want to do tax planning for my new company, and how should I start? That is a question you can give to every CPA you work with, and we welcome you to come to Community CPA. We never use our webinar to advertise ourselves, and our focus is to let you know that you have that resources in your neighborhood and you can tap into our branches. So we have one branch in our city, Bloomington, Minnesota, and here Des Moines, Iowa, right? So you can always tap into our local branches, contact us, and to see, hey, I want a tax planning service, how should I start? Our folks will know that. If you're our client, you really don't need to do much because we already have your information. But if you're new, we do need a couple of things from you. We need your last year tax return and your financial statement as of September 30th of this year. And then we want to know your personal objectives and how you feel about things. So we will have a meeting and then we can get on Zoom to really show you the roadmap. We literally have a roadmap. It's not words. It's not a document, 17 pages, look like printing out of template. We don't do that. You know, English is my second language. Even though I wrote books, my books are very simple in vocabularies because I don't have great, Harvard level vocabularies, and I speak very simple English. And, there are times because of our language habit, we're not wordy because we don't know how to wordy. So our things are very graphical. So if we give you if we do tax planning for you, we actually have a graphical chart, just like how you are seeing what I showed you earlier, and it shows what you have, how that rolled over to your 1040, and how we reduce taxes. So it is really a chart like all of our client wants it. My client would hold on to that chart year after year. So if they have been our client for 15 years, they had 15 of those charts already every year to look at their growth, look at how they develop their business. With that said, folks, and that is what I'm trying to knock into you and making you convinced that tax planning is a thing and you want to do planning and don't miss out the opportunities. It is actually 3 months before the end of your business physical year or calendar year. That's why I say it's October, November, December. But if your company ends in October, so obviously you should start doing year-end planning July, August, September, right? So 3 months before the year end is really the golden time for you to do planning. Folks, don't forget, and we are here to help you. And if you have any questions, you know who to contact. Our 3 p.m. webinars is here, and you can email Catherine at communitycpa.com. You can literally write your comments on our YouTube as well. And so we watch what you write, so we will respond to you. If it is a question, if it is a demand, if it is something like you wish to have, then we will be able to put that out for you as well. All of our webinars, they didn't come out of our we just do it, and it's actually coming out of a lot of input from a lot of clients of ours. Sometimes they request, sometimes audience requests, so it is really a place we try to focus on business answers and really give the entrepreneurs that cannot go on to high-rise building, hire those expensive CPA firms, attorneys like Big Fours. Man, we cannot afford them, but you can afford Community CPA because we are you. We are just like you. We are the firm grow from zero to today, and you will just follow our path and grow with us. And you can call this number, and we are the only CPA firm I know. I checked it all over the place. We are the only CPA in this country I know open 6 days a week. So this is our badge. We have always been doing that ever since the first day we become a firm. So you can count on us. On Saturday you call, a real person will pick up your call. And if you're local to our branches, you can visit our office. Otherwise, and you always have us there for you on the call. And with that, I conclude today's webinar. I will see you again on Saturday. Hey folks, I'd like to see you subscribe to our channel and give us a thumb up. That's how we can branch out to reach out to all the other people that who really need us. I will talk to you.